Hey everyone, I'm here today with Gabe, and we've been talking about Brookfield Asset Management, or also known as Brookfield Corporation, because they recently did a spinoff. And there's a lot going on in the world of commercial real estate and real estate investment trusts, and some of the problems with some of these things. And I was first interested in learning about Brookfield Corporation because Mohnish Pabrai had previously invested in them, and then they had spun out and had two tickers. So they have a legacy business, and I think that that was left more with BAM, and that was the more asset management side. And then there's a larger side in Brookfield Corporation, or ticker symbol BN. And I might not have that 100% correct. I'm still trying to figure it out. And maybe Gabe, you can enlighten me which you think is which. Like, what's the difference between these two tickers, BN and BAM, with BN being the new ticker symbol, but I think, they kind of switched around the business assets. What do you think?
So the difference between BAM and BN, if you buy Brookfield, you'll be getting access to the infrastructure business they have. You begin access to the business partners business they have. You begin access to the asset manager too, because they technically own 75% of the asset manager business still. And on top of that too, get access to the commercial real estate funds too, with V through BN.
Okay. So it does it make sense that BN is the bigger business, whereas like they seem to maybe do some more of the wealth management stuff with BAM? I'm not sure. What do you think BAM does?
BN's the bigger business because it's been on longer. With BAM in Pacific, you be getting access to the Oaktree funds too,
Mm,
via through the Oaktree, with Howard Marks being the head of that because they technically own Oaktree, and you can go buy the preferred shares of Oaktree too, via through Brookfield Asset Management slash BN. I mean slash BAM.
yeah. Well, and I noticed both of them gave dividends, I think, but maybe
Hmm?
with one of them it was being maybe phased out. But anyway, so it's good to know. I mean, this whole area is a little bit new to me in terms of some of the real estate and asset management stuff. So what are your overall thoughts about Brookfield as a business on the whole? Like, what have you noticed going on with them, and maybe some of the problems in the industry?
Some of the problems they're facing would be the commercial real estate, but that's in the hole. With the commercial real estate, it is the lowest levels in 2009. If you look at the broader view of the industry, you should be focusing on it. You should be focused on the inflows and outflows of capital. You should be focused on redemptions too, because because a major player would be Blackstone, and they specifically play in the single family homes and the asset classes of REITs, and they've been getting a lot of redemptions through that. So that would be a concern if BAM slash BN just gets a bunch of redemptions. And if you see too that BAM slash BN defaulted on their LI offices due to the fact that commercial real estate is collapsing at the moment, that would be another concern.
Yeah. So do you feel like their business model is kind of significantly based on commercial real estate, or what do you think the portfolio is made of?
It's made out of infrastructure. They have the venture arm with the business partners, which is BBU, and then um they have BAM, and then after that, yeah, that's about it.
Okay.
Because you have the business partners, and then you have the infrastructure, and then you have the commercial real estate,
Hmm.
and then on top of that, you have the asset management. View through BAM, as I stated before, you get the credit view through Oaktree too.
Yeah. Well, and kind of like what got you interested in Brookfield? Like what about this asset manager is really appealing to you that makes you want to study it as a business?
That got me into asset management was actually BlackRock. I got into asset management really through BlackRock because I want to know what was actually happening. Because if you look online, they supposedly own everything, but they really don't.
Uh-huh.
They work really through extraordinary accounts. And what got me
Okay.
interested in BAM slash BN was so I read this book called 100 Baggers by Chris Malin,
Yeah, I think Chris Mayer.
Mayer, and he talked about Brookfield. He talked about Brookfield business partners because technically Brookfield isn't 100 bagger from the IPO. So that got me interested in that. And then what also got me interested in that too was I read The Most Important Thing by Howard Marks, and then I read Mastering the Microcycles by Howard Marks too. So I looked around and tried to find if I can own Oaktree, and that's why I stumbled into BAM slash that.
Okay, good to know. And so in trying to like tease out some of their businesses, is there something about, say, the ticker BN compared to BAM that you think is really a big deal? Like I noticed when Mohnish Pabrai first owned, used to be just called BAM, right? Before they spun out the second ticker symbol and business and so on. Like it was originally just BAM, and he owned that. Then it spun out. Then he owned both ticker symbols, but then he sold the BAM ticker symbol, and then most recently in the second quarter in 2023 he also sold BN entirely. So it's kind of
Um,
surprising that Mohnish Pabrai was in it so recently, and makes me wonder, kind of, is one maybe better than the other? Like, do you think the stronger business is being done maybe with the company that has the ticker symbol BN?
yeah, if I was gonna pick one that would be better, I would probably pick BAM over BN. But
Hmm.
BN has its own advantages with the properties, of course. And I finally remember the ticker for specifically for the properties. It's BIP, and that would be specifically the real estate part of the business. With BAM in specifically, BAM's a really good business. The reason why they did this was to create long-term value, which I 100% agree with, because this didn't create long-term value because the market sold off through the confusion. And then if you would have picked it up at like if you would have picked it up in like the beginning stages of the special situation where you through the spinoff, you would have made insane gains.
Hmm.
Like I own both personally, and I'm up like 10% I'm up 10% on both.
Wow. Well, that's cool. And I mean, just for the audience's purposes, we're not necessarily suggesting what anyone should do. Like it's great that you did really well with it, Gabe. And it's great to learn from your example. And I hope you have the most success with owning these stocks. And I just want to make sure people don't get confused because we're not trying to hype up any stocks. We just want to, do this for educational purposes. So I just want to put that little bit of disclaimer there because this helps me learn also about more of this type of business and makes me kind of wonder, what some of the pros and cons might be. So do you think that maybe some of the business could have sold off a little bit because there's a lot of concerns with commercial real estate right now, with a lot of, people not really going back to the offices, and there's a lot of still hybrid model of people partially working from home, maybe sometimes going to the office, but mainly people are maybe not being as out and about as they were before. And so like a lot of the economies related to office work, like the sandwich shops and other downtown economies are probably suffering. So I'm guessing a lot of commercial real estate related to office lifestyles are kind of suffering. So is that part of why maybe some of the Brookfield stocks may or may not have, kind of experienced some volatility related to some of those trends that are changing?
Yes, some of that might be that, and you also have to remember we're in a credit cycle, we're in a massive credit crunch actually, with with the credit not being vastly available and stuff like that, because they own Oaktree and they specifically deal in distressed credit and stuff like that with the credit market not really going up there slash being in the cycle. That might be it too. And of course, you have the asset management, and then with the infrastructure part of it too, you have the Intel plant that they own, so that might be part of it too with the Chips Act. And then of course it's such a complicated business that people just leave. because it's very complex. As you can see, there's now 6 businesses within one business, and it's very hard to understand. It's very hard to get your head around sometimes too. So I do
Yeah.
suggest people read the 10K because they lay it out pretty well. And each one of the tickers has their own symbol slash their own 10K if you want to get really into the weeds and figure out what they actually own.
Okay.
I don't know if that answers your question fully.
Well, it helps. I think it's something to ponder about because nobody should just look at a stock price chart and say, oh, it's going down or it's going up, so this is good or bad. And people shouldn't just make a decision on price alone. So maybe if you don't mind sharing a little bit about what you researched in addition to the 10K. I know you read some of Howard Marks's books, and probably you've come across his blog articles. I know that there's a lot of rich information about Oaktree and what he does in some of his blog articles. What did you do to learn about this business and make you feel like you understood it well enough to want to invest?
So I did the 10K, and then I proceeded to look at the annual report, and then I proceeded to listen to owners calls. Well, with a business like this, with a business like BAM in Pacific, you have to look at the fee earning revenues. And once you figured out when they can own fee earning revenues, you can take that and you can put it on the market cap, and then see if the market cap will one of the I think it's the market cap. You put it to the market cap to get a very dirty evaluation, but it's based on the fees owning, not really like the actual cash flow. And then of course I have the access from BlackRock from learning about the debt funds via the iShares, learning about the AAA bonds they have, and the municipal bond fund they have. That gives you a good standard of that. But if you want to learn about the business, you have to learn about what each fund has. Because with BAM in Pacific, they have a lot of joint ventures that you're non-controlling. So if you want to think about it like this, like Berkshire owns Dairy Queen, but they're not going to tell Dairy Queen to do X, Y, and Z. They're going to let them do their own thing.
Hmm. Right. Okay. Well, that helps. It's good. Like it sounds like you've done your homework, so that's great. Like it's always important as a lesson to all of us as aspiring investors to make sure we learn as much as we can about a business before we were to invest. So I appreciate you sharing more insights about that. And I also just want to ask, are there any kinds of situations going on now with Brookfield or also the BAM side? I'm referring to BN as more normal Brookfield, and then BAM is like the
Yeah,
sort of
you're,
spin
yeah,
up.
you're 100% right with that one. With Brookfield in Pacific, um, there is some distressed parts of Brookfield if you look at the commercial real estate side of it. You will be buying a limited partnership though, so that will have different tax consequences
Mm-hmm.
than owning a stock.
Uh-huh.
And then of course you have the preferred shares from Oaktree, which I always think is always a buy, but based on the opportunity performance slash given how it's traded, because you have to remember this one too. Oaktree was one of the main players when the Indian scandals came out. They were the first to jump in. So
Mm-hmm.
you might have a fraud happening in India. And if you look into the book with business partners, they have a whole entire they own like half of the water rights in Brazil. So now you're dealing with the Brazil economy. So that might be a lot of convolution there, of course. And that Brookfield Business Partners again is a limited partnership, so tax consequences will be different than is owning BAM and BN because they're both common equity.
Okay. But how could someone own the partnership as opposed to just the stocks?
So BAM slash BN owns trades under two tickers actually. They have the partnership, and then they have the partnership, and then they have the equity. And with the limited partnership, you will get less on your tax basis because every single time you invest the dividend, it will just go off of your tax basis. So think like EPD, um real EPD and a lot of the gas. companies are actually limited partnerships. So you buy in with the partners, and then after that, you cost as you get the dividends, it will lower your cost basis as you continue.
Mm-hmm. But I mean, you wouldn't normally experience that if, like, let's say you're in your Vanguard or Fidelity brokerage and you put in the ticker symbol BN or BAM, you won't see that, would you? Or does that appear as well if someone is
They trade underneath different tickers. I'm blanking what the tickers for like the partnerships tend to have 4 to 6 symbols. Like
okay?
for the Brookfield property one, it's BYYP, I think,
Mm-hmm.
and that would be the partnership for
Oh, I
that. And
see.
you would get the preferred dividend too.
Mm-hmm. Okay. All right. So it seems like there's so much more to this than I had imagined. I mean, I didn't really know much about it other than seeing the super investor Mohnish Pabrai be in it and not. And that actually makes me want to ask you, why do you think Mohnish Pabrai was bullish about it like fairly recently and now all of a sudden decided to let it go?
Of course, if you look at the data filings, he bought it exactly at the acquisition slash spinoff. So you have to remember the spinoff, he got about 4 times more shares of BAM each. So one BN share equaled 4 BAM shares. So when he initially loaded up, he got his initial tranche, and then on top of that, now times that by 4. And with the given recent movement, and him not trying to lose money, it would be the smart thing to sell if you have investors underneath you.
Mm-hmm.
And given the recent movement slash the market finally realizing that this is actually long term good
Mm-hmm.
for BAM slash BN. Because BAM still has 75% control. I mean, BN, Brookfield still has 75% control and interest in BAM slash
Mm-hmm.
Brookfield Asset Management.
Right. So for now, maybe he made his money, it sounds like. I know Monish tends to, he likes to be able to get a multi-bagger in a few years. So if he can multiply his return in a short window and then reallocate those resources to something else, maybe he just took advantage of the special situation that there was this spin-off into two ticker symbols and took advantage of that investment opportunity, but maybe he right now wants to devote the capital to somewhere else, but maybe he's still going to remain interested in this. I know sometimes he goes in and out of certain stocks, so just because he might not be in it now doesn't mean that he won't ever come back, right? Like you never know what he might do.
Oh yeah, definitely. Yeah. Bruce Flat is a very good CEO too. He thinks like the Warren Buffett way. He always thinks long term. There's a Google talk with Bruce Flat. If your viewers want to view that, it's a very good talk. He talks about the principles of Brookfield. He talks about the principles of long term investing. Of course, till Mohnish could have got out through the shakiness of the asset managers during that time, with the redemptions view through Blackstone and the credit crunch and assets fleeing into other funds and stuff like that.
Mm-hmm. Yeah. Well, I mean, all of that is, probably means that some businesses are not just always having everything go right for them all the time. I mean, that's what investment is all about. You make certain bets that you have an educated decision about, like you try to do your research, and I'm sure the people working at Brookfield have done a lot of work to make the best decisions possible. And sometimes things just either don't work out or they take longer than expected to work out. So hopefully things will work out well eventually for Brookfield and for your investment. And it is very interesting learning about it. And kind of, do you know if any other super investors were into Brookfield at all?
Markel.
Oh, really? Markel's
I think Markel
invested?
had a bit.
Oh, so Tom Gaynor's
There's a
in it.
lot of them for a bit. I haven't looked, but there was a lot of them in BN
Okay.
through the acquisition. And of course,
Uh-huh.
too, there's a lot of nuance that goes into business. At the end of the day, investing comes with a lot of nuance.
Hmm.
You have to know the nuances to actually invest. Because if you don't know the nuances of the business, and then something randomly happens, and your portfolio just blows up, you're gonna be shocked slash
Yeah.
flabbergasted.
Right. Yeah, for sure. And I mean, that's also something that um, people who have listened to my podcast, like you, I appreciate you tuning into our podcast, the Investing Mastermind podcast, about um, what things you should be prepared for. So, Charlie Munger, Warren Buffett's best friend and business partner, said that you should always invert. And when you invert an investment case, you might fall in love with a company and say, these are all the reasons we should invest. But then he said, you should destroy your most loved idea and come up with the reasons not to invest. So if you know what the reasons are not to invest, then you start forming potentially an exit strategy if certain things come to pass and you're not sure what's going to happen with some of the events that could make something a possible reason to sell. So it's helpful, to think about those factors and understand. And do you do something like that as well? Do you have some potential reasons why you might sell if certain things came to be reality?
Oh yeah, definitely. Yeah, I take the I take the Ben Graham approach to it. I try to nuke it. Like I try to figure out like what would absolutely kill the business.
Hmm.
I don't really do the invoting thing because like invoting's good, but like you're not gonna know everything to invote everything. So my thoughts is like let's do a nuke at it and like would it actually survive?
Uh-huh. Okay. Yeah, that's a good point. So yeah, keep it simpler. Yeah. But it's good that you have, thought about these things because a lot of people they might get into it and then they have no idea when they should leave. And some people are undecided, if they only want to stay in it for a short time or if they plan to stay in it for what Warren Buffett recommends, like you should only own a stock if you're willing to own it basically forever. So it's kind of like, you know, um, there's different approaches. There's always many ways to success, and you know there's many ways to become profitable in your investment. But I think that we both appreciate Warren Buffett's teachings, and I try to live up to that. Like I try to remember those principles, and it sounds like you also do. Like you're also trying to keep some of his principles in mind when you're investing, right?
Oh yeah, definitely. Yeah, I don't subscribe to Warren Buffett's principles. I'm more subscribed to Guy Scala's principles because if you
Oh
look
yeah.
at Guy Scala's principle, he doesn't sell anything, and if you look at the average holding time for a stock, it's not like 2.5 years. And if you want to go long term investing, you should be holding it for 5+ years and actually let the business develop
Hmm.
so you get through multiple cycles.
Hmm. Okay. Yeah, well, it makes sense. But, you know, I know maybe Berkshire Hathaway might be in some stocks a little bit less often for less long than others, but like I know Guy Spear was a disciple of Buffett. So, yeah,
Oh yeah, definitely.
yeah, some of it we obviously have to pick and choose what works best for our investing temperament. And, it's not to say it's one size fits all, that there's only one right super investor. You can choose whatever makes sense from others that we learn from. So I appreciate you sharing, learning from the CEO and also learning from Howard Marks. Those are all really great sources to learn more about what this business is about. So I really appreciate your time, Gabe. And I just wanted to also mention if anyone has any questions for Gabe, you can find him on Instagram and also X, formerly known as Twitter. I'll include links to his handles in the YouTube video description. And with that, Gabe, was there any other last final thought you want to share before we might wrap up for today?
You can also find me in the Capital Mindset Discord. We're always welcome. We're a very open community. We have old people. Our biggest age group is actually 40, and then after that it's my age group, which is 23. You have to remember this one too. Investing is a journey, a personal growth slash personal discovery. And if your temperament does not suit yourself for investing, I do suggest that you just buy an S&P index and just let it out and max out your IRAs, max out your Roths, simple things. Simple things that go a long way. And then yeah, that's about it. You can catch me in the Discord. My name is Fuhat 2.0 now because my original account got busted due to the fact I busted my phone. But other
Oh,
than that, yeah, I thank you for your time, Michelle. It's always a joy / pleasure talking to you, and always
Well,
enjoy your content.
well, thank you so much, Gabe. It's been awesome, and I'm so grateful. And I hope we can do this again sometime. Thank you for sharing all your insights.
Oh yeah, definitely. Yeah, I'd be down to do it again sometime too.
All right. Thank you, Gabe. Till next time.
The next time.